10-year yield at 3%, that's a big one, but it's not helping the banks that much. Take a look at the S&P. I just want to remind everyone, we're knocking on the door of the old historic highs. Remember, it was 29.14, I believe, it was the end of August. And look here, 29.06, so 7-8 points away. That's nothing. We can do that in a couple hours. Take a look at the sectors here. New highs have been expanding this week a little bit. The volume's getting a little more back to normal here. Banks are up a little bit, but it's been horrible for the banks recently. We should get a better move. I'll show you some of the moves this week here. Generally down. Energy's better this week overall, except for yesterday. Semis have been bouncing around a little. Emerging markets generally, there's a lot of talk about whether we're at a bottom at emerging market. We'll talk about that a little bit later, but generally emerging markets are up this week. Take a look at the market trends overall for the United States. I call it mixed right now. I think the important thing is we're approaching new highs on the S&P. Tech, I'll call it stable, up and down on the semis a lot, but generally stable to the upside this week. Banks are in a clear downtrend, folks, and the dollar, well, it's been weaker recently, and that's probably been a big help to the market. Just take a look at some of the bank stocks. I'm talking about regionals now. I talked a lot about how Goldman is weak during the week. This is just this week for the bank stocks. These are the big regional banks that we all follow. Part of the problem is that spread, the yield curve flattening. The 2-10 spread, looked at it this morning, 21 basis points, the spread between the 2 and the 10-year. Put up that chart, you'll see here, that's the lowest we've been essentially going back 10, 11 years since 2007 or so. And that's been a major problem for the banks, the inability to get that spread a little wider. Global market trends, again, I'll call this mixed. Japan's had a great week overall. We're at the highest levels of the Nikkei since February. China's downtrend still intact. They're down this week again, 3 straight weeks, and essentially down. Shanghai 25% off of its lows in late January. Europe hit the lowest level since April this week, but it's moved up, so we are off of the lows, let's call it that. And emerging markets generally are bouncing. So let's remind everybody what exactly moves the stock market and has been moving the stock market. Number one is China and trade wars. Up on resolution, down on trade war talk. The dollar's been a big help because it's been quieter in the last couple of weeks. The other big mover of the market is tech leadership. We have seen faltering when FANG stocks move, faltering when semis move down. But again, the trend is not clear. So let's call it down, but it's not out. The other one, fourth one, Fed and the rate hikes, not disruptive. So 2 issues, the China trade wars and the tech leadership are big movers of the markets. Interest rates and the other issues generally fairly quiet. Right now, the Dow up 47 points. Carl, back to you.